Hi everybody, Nick McDonald speaking. Thank you for joining us for this week's ICE commentary on the US equity markets. Last week we did our first special update, midweek update, and hopefully many of you caught that. So that came out on Wednesday, and you can go back and look in the archives if you'd like to view that. That was a 16-minute long video, so certainly longer than usual, and based on the erratic market conditions we have at the moment, I had quite a lot to say. So that was back on this candle here, this red candle, at the close of Wednesday, and since then the market has quietened down a little bit, so it's still been pretty volatile as if you compare it back to normal market conditions, but certainly we've quietened down. And one thing is for certain, that this level we identified of 700 has really proven to be a really key level, and anyone that was in any doubt over that, and I keep on pointing out how strong these levels are, even when somewhat ignored on the way down, it's been major. It's acted as major resistance on the way back up. So if we come back and look at this is an old line on the monthly chart which has been there as a potential support level for months, in fact, since we're all the way back at these highs, and I was talking about a fall coming sometime in the future and the levels it would get to. We had these levels marked. 700 is now our really key level, and that is where price is struggling to get through. On the upside now we have this upper level of 765, which is up around these old previous lows. That is likely to act as big resistance. On the downside we have 600. So the big question now is, while we're around 700, are we going to break 700 and get to 765, or are we going to find resistance at 700 and fall to 600? Let's have a look through all of the charts and really make that decision. I just want to have a look through some of the cash index markets and then come back and wrap things up on the Russell. So firstly, let's just go and have a look at the Dow. And I want to look at these monthly charts because on all of these I identified these levels where price was likely to find support, and on the way down it looks like we're just falling straight through them. Have a look here on the Dow. These lines have not moved since pre these falls happening. These lines were on my charts. Price has pulled back to this level, pulled right through it, but now coming back up and rejecting off the lows. So it's right on the 50% pullback plus these old highs. And we're really starting to reject those and coming up and just testing them from the downside again. It could turn into quite a strong bullish rejection. Of course, it could prove to now be a resistance level and fall off. But the key thing is that the Dow is there as well, testing that same level. And if we look at the weekly chart, we've got this really nice bullish rejection. Come and have a look at the S&P. And we see a very, very similar scenario. Come and look at the S&P. It's just a little bit further below that level, but this level of kind of 1220 down to 1200. These previous highs, big number, price pulling back in, now starting to come up and reject and test that level from the downside. So 1200 now being the key level there on the S&P cash market. And coming in and looking at the Nasdaq, it's actually quite a different story altogether, and this is where there's a glimmer of hope for the markets actually remaining bullish. Looking at this on the monthly chart, here was our key level, 2060, for price to pull back into. Some of the Fibonacci lines have gone, but if we just draw the Fibonacci line back in again from the lows to the highs, you can see 50% clustering perfectly with these old highs, which is our key level here. Price coming down and bouncing right off it, and now actually, based on this monthly chart on the Nasdaq, actually looking bullish. There's nothing bearish at all about that chart. So now coming right back to the Russell. And how do we tell this together? Well, things, just from looking across those markets there, things are not as bad as it may seem. I think that's the key thing. Now, there could be more catalysts. There was a big catalyst, of course, with the S&P downgrade of the US credit rating. That was a massive catalyst. That's what pushed the markets lower. We've then had more fear during the week with things coming out of Europe. Maybe France will get their rating downgraded, etc., etc. These are things that could push the markets lower. The thing is, it's speculation right now. There's nothing factual. When the facts come out, then the market will do its thing. For now, though, I need to look at technicals and think, right, without that catalyst, because I cannot predict what will happen with France. I just don't know. However, I can look at the charts, decide what is likely to happen next without any major catalyst to push the markets down. And my belief is firm that if we don't get some really piece of bad news out this week, then I think that we will be testing this upper level here of 765 before we test this lower level of 600. If we do fall, then 600 is a really strong key level, and I'd expect price to find support there. That would be a really big fall, by the way. So if we fell down towards that level, if we got there in a week, it would be huge. If we got there in a couple of weeks, even a month, it would still be a big move down. However, I don't think we'll get there. If we do there, that's where I'll be starting to look for support to come in. On the upside, 765 is this upper level. At the moment, though, I'm more looking for trades around the 700 mark. And let's just have a little look. So I identified this on Wednesday to be looking around trades around the 700 mark. And here's the week's action on the 15-minute chart. And this is around about where I was speaking in the middle of the week. Came up here. I got a nice little trade off 700 as we came up and rejected it. Came up and rejected it again 3 more times. Now I only got 1 trade out of those 3. However, I got some nice trades, a couple of nice trades off that level. One other thing I identified in my midweek update video was these gap closes and how they are a very effective strategy, especially in a volatile market. And let's just come back and have a look at the gap closes that occurred between me speaking last on Wednesday and then this week. Beautiful gap close here on Friday. Big gap up, actually rallied up further, which gave an even better entry point. Entry around these highs as the candles turned bearish, came down and got a really, really nice gap close there. Coming back to Thursday, another one which this one pretty much on the nose came down and closed the gap. So came up, rallied again, came down, closed the gap absolutely perfectly there. So I'm looking at the close on this candle here and the low on this candle here. Closed the gap perfectly and then rallied off in the other direction. So since I spoke there, 2 gap closes as well as rejections of 700. So anybody who listened to that midweek market update and took note of some of those factors would have had some nice trading opportunities this week. And certainly going forward for this week coming up, there's plenty more opportunities, and I'm looking for opportunities, continuing to trade those gap closes, looking for trades around 700. I will just as easily go short while price is below 700 as I will go long when price is above 700, and then above that level I'll be looking to trade with the trend and start looking for similar shorting opportunities as and if we get up to around 765. But the key thing is for this week is to keep risk low, to keep risk in mind, and realize that in really volatile markets the most important thing is to keep your money as compared to try and make a fortune. If you trade well, trade small, reduce risk slightly more than usual, and just get on the right side of the market direction, then there is some really good money to be made. And all we have to do is trade what we see, not what we think. And hence I won't be going and trading things about what I think might happen, what I think could happen out of Europe, what I think could be happening in the US. I will trade what I see on the charts, and what I see right now is exactly as identified now. A market which is not as bearish as what it might be portrayed in the press. Some really key levels that are providing good trading opportunities, and a range of US index markets here which are actually looking somewhat strong after such a big fall, starting to show their signs of rejection. If we look at things like these weekly charts, breaking down, coming back up, testing really strong levels from the downside, but big rejection candles like this. And if we can break up through there, and this week if we can get up through the high of that weekly candle and above 700, it's certainly started to look good to the upside, just bearing in mind the risk of any major news event which might change things quite quickly, and that is the risk of the market we are in right now. Happy trading all. I hope that helps, and I will look forward to speaking to you again next week.